Hey everyone, welcome back to Corporate Decoder. FiEE Incorporated today reported on new stock awards for its top executives, and I am seeing a potential signal about where this company's focus might be. Quick note, this is not financial advice, just my take on public filings for educational purposes. While these awards are standard, the timing and the amount might tell us more than just executive compensation. FiEE Inc., exact name of registrant as specified in its charter. So what we're looking at today is a standard filing from FiEE Incorporated. This is a company that operates in the technology and communication equipment space, and it has a relatively small market capitalization of around $54 million. They also have a price to earnings ratio of about 29.5, which suggests investors are looking for growth. It is a lean operation with only 3 employees listed. The main event here happened on May 12th, 2026. The company announced that its board of directors, following a recommendation from its compensation committee, decided to grant restricted stock units, or RES, to its chief executive officer and president, Lee Wai-chung, and its chief financial officer, Cao Yu. These RS were granted under the company's 2025 equity incentive plan. Each executive received 143,561 RSUs. Now, what is an RSU? Think of it as a promise for future stock. Each RSU here represents a right to receive 1 share of the company's common stock, once certain conditions are met. These awards are not given all at once. They are designed to keep these executives with the company. The first 30% of the RSUs will become theirs 1 year after the grant date. Another 30% will vest 2 years after the grant date, and the final 40% will vest 3 years after the grant date. This is all contingent on them still being employed by FiEE Incorporated on those vesting dates. This is a pretty standard way companies try to retain their key people. Now let's try to understand what this means. We see from external reports that FiEE Incorporated is also granting stock units to business partners. This filing here specifically focuses on the awards to the CEO and CFO. This type of announcement under item 5.02 is typical for compensation-related changes. It is not unusual for top executives to receive stock awards and options as part of their compensation package. These are often tied to performance and continued employment, serving as both a reward and an incentive. The specific number of shares, 143,561 for each executive, is significant when you consider the company's small size and employee count. The fact that these grants are happening, especially with the company having only 3 employees, suggests a strong focus on retaining the core leadership team, for a company with a market cap of only $54 million. These grants represent a notable portion of potential future equity. It is also interesting to note the timing, as there were other news reports around the same time about FiEE granting stock units to partners, while this filing only details the awards to the CEO and CFO. It adds to the picture of the company using equity as a tool for both internal motivation and external relationships. Looking at the broader context, FiEE Incorporated is in the technology and communication equipment sector. Companies in this space often use stock-based compensation to attract and retain talent, especially when competing with larger, more established companies. The market's reaction to such events can vary. Sometimes large stock grants signal confidence from the board in its leadership, which can be viewed positively. Other times, if the grants are perceived as overly generous or not tied to clear performance metrics, they can raise concerns about dilution for existing shareholders. Given FiEE's small size, the shares granted to the CEO and CFO are substantial. If they vest and are exercised, it will increase the total number of shares outstanding. For investors, it is important to understand how this might impact the value of their existing shares. While this filing focuses solely on the compensation aspect, it is part of a larger narrative for FiEE Incorporated. Understanding how these grants align with the company's overall strategy and financial health is key. We don't have specific financial tables in this particular filing to dissect, but we do know from past reports that FiEE aims for growth. The risks for a company like FiEE Incorporated include intense competition, rapid technological changes, and the challenge of scaling up operations with a small team. Executive retention is crucial for navigating these challenges. These stock awards are designed to ensure that the individuals steering the ship have a vested interest in the company's long-term success. What I am really looking at here is the balance. Are these grants a fair reward for performance and a strong incentive for future growth, or do they represent an unsustainable dilution of shareholder value? For a company with only 3 employees, the leadership team's effectiveness is paramount. This filing suggests the board believes in that leadership. The context we see from news headlines is that FiEE has been active in granting stock units, not just to their executives, but also to business partners. This indicates a broader strategy of using equity as a currency to foster relationships and drive business. My take is that these grants to the CEO and CFO are a clear signal that FiEE Incorporated values stability and continuity in its top leadership as it navigates its growth phase. The extended vesting schedule ties executive interests directly to the company's long-term performance, which is generally a positive indicator for shareholders looking for sustainable growth. The risk I am watching is how well these executives can actually drive that growth to justify the equity awarded. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. Like, comment, subscribe, and join our Discord in the description.